Good afternoon. Thank you for joining us today and being a part of Series 4 of our Keep Calm and Lend On series. Today we'll be talking about the digital lending journey and the pursuit of digital transformation during COVID-19. I do want to give late arrive attendees a little bit of time to join. So I'm going to wait for about a minute or two, and then we will officially get started. Thank you very much for the opportunity to be with us today. Ladies and gentlemen, again, thank you very much for your time. My name is Jeffrey Ward. I'm an enterprise executive for TurnKey Lender, and we are honored to have your audience and the availability to share with you some of our knowledge. We understand that this has been a very difficult time for many businesses and individuals, and we hope to share some helpful tips on how lenders can use technology to shift to a more digital presence. We will discuss how lenders can automate the loan application, origination process, and how technology can transform the funding and payment experience for both lenders and their borrowers. There's no doubt that the lending landscape is changing, and lenders must quickly adopt to this post-COVID world. I have the honor of introducing two guests to you today. First is Elena Ionenko. She is a co-founder of TurnKey Lender, a very strong cloud-based lending software for evaluating borrowers, making decisions, and online lending process automation. Our next guest is Susan Perlmutter. She's the Chief Revenue Officer of REPAY and a leading provider of vertically integrated payment solutions. A few housekeeping notes before I do get started. With all of us working remotely, I would ask that you give us a little bit of patience if there's an internet connection issue or a potential glitch. Be patient as we will shift presenters and get right back to the point, right back online. Also, I would say that if you have any questions during this webinar, feel free to put them in the chat box, or we will be gladly answering questions at the end of our session with the Q&A session. Now, without further ado, I'd like to introduce Elena.
Thank you, Jeff. Good afternoon, everyone. I'm a co-founder of TurnKey Lender. We provide credit scoring and decision automation solutions for the non-bank lenders and traditional financial institutions, credit unions, and banks. And before starting TurnKey Lender, I've been working with banks for many years, and I could see a huge gap between the customer needs and what bank could offer in terms of customer experience and service. So with the new wave of non-bank lenders, it was exciting to realize that the financial industry is finally transforming. And we wanted to support fintech, so that's why we built technology that would provide maximum automation and the best user experience, but at the same time, we made it very user-friendly and end-to-end. So our mission is to make lending better for both lenders and borrowers. And we've been working with all kinds of lenders around the globe. We operate in 50 countries, and we've been working with non-profit lenders. Something wrong with my video, right? Okay, I'm sorry. So we've been working with non-bank lenders, with really non-profit lenders in Philippines who provide microloans to new parents who need to do vaccination to their babies because they cannot afford it otherwise. We've been working with all kind of government-supported lending programs for refugees and new immigrants in Canada, in Australia. And we support multiple lenders here in the US who provide credit to consumers, to businesses, when they need it and where they need it. At some point, banks realized that they need to compete with fintechs, and they've started looking for digital technology as well, for digital lending technology. So right now we work with banks as well, and we provide the top-notch decision automation and loan origination and management solution so that users can have unparalleled experience when they apply for a loan online.
Fantastic. Thank you very much, Elena. Now, Susan, would you like to introduce yourself?
Yeah, thank you for that welcome. Sure. For the last 15 years, the balance of my career has been spent building payment technology and delivering payments to the lending industry, particularly heavy concentration in the auto finance market. In early 2016, my payment company was acquired by REPAY, and I became the Chief Revenue Officer for the REPAY company and now head the sales and marketing efforts into the lending industry. REPAY is dedicated to that industry in building products specifically for lenders and the lender's customer. It is something that we hold ourselves out as experts and do a deep dive not only into the needs of our customers, but the legislative and challenges that they face in their everyday business.
Fantastic. Thank you very much. So let's begin with the loan application and origination process. Traditionally, this has been a slow, methodical process, often taking several days, if not weeks, and involving hours of manual analysis. How can lenders bring efficiency and speed and automation to this process?
Yeah, okay, so I just want to do like very high level overview of the traditional process so that we can understand where is the room for improvement. So we're all way too familiar with traditional way of applying for a loan, especially if you deal with a bank. You'll most likely have to schedule an appointment with a banker. Then you should expect to spend at least an hour in a branch, and you would fill in multiple paper forms, and then the banker would key in this information in the system, and then you would wait for a few days for the decision, and then again you'll have to you'll receive some paperwork that you have to sign and so on. So even if a bank or financial institution has an online application form, in many cases it's just a web form capturing borrower's data, and it's still processed manually on the back end, and sometimes it takes few days. I remember when I was applying for a credit card with a bank that I've been banking with for many years. I just didn't have any credit relationship with them, so I decided to apply for a credit card, and I found online application form. I submitted it. I mean, I spent some time submitting all the required information and supporting documents, and all of that just to receive an email notification that my application is received, it's processed, and I should expect a decision in my snail mail within 5 days. So these days, that's not the user experience people are expecting, and that's not what they want, because I mean, I wouldn't wait for 5 days to hear back from them. I would just go and shop for another option. That's why it's extremely important to be able to make decisions instantly and to deliver the money within minutes, not within days.
Wow, thank you for that. So it sounds like with digital transformation, you can really stop that shopping experience for a client looking for a credit product. Now, how can AI transform risk assessment and decision making?
Yeah, okay, so let's first see how we can make decisions instantly. For instant decision making, credit scoring is like an extremely important component, and you have, especially if you're dealing with consumer credit, you have to consider multiple data points, and you have to consider multiple characteristics before you make your decision. And as I mentioned, we've been working with non-bank lending industry for many years. So we've processed millions of loans, and we analyzed multiple data points, and we were able to build very sophisticated credit scoring models based on not only traditional credit history data, but also on all kinds of alternative data sources. So it is extremely important, especially in this environment, to be able to check, for example, to look up the borrower's bank statement transactions. because sometimes if they lost their job, you wouldn't see that on a credit bureau report immediately. So, but you can see these kind of indicators on their bank statement if they receive unemployment benefits and so on. Then we can analyze their behavior during the online application process, because it also can be very informative. If they copy paste, if they delete certain information and retype it, if they delete the attachment and reattach them. So again, it's all statistically proven that some of these behavior can be an indicator of potential fraud. And finally, we can look at their psychometric profile, and it also gives us some insights on their level of responsibility, integrity, propensity to risk, and so on.
Fantastic. Thank you for that. Psychometric scoring. I wish I could do that on my kids.
It's very exciting, actually, and the whole point of a psychometric scoring is to ask you a few questions, and you cannot guess the right answers, although everyone tries to, because they want to look better than they are naturally. So, but it's it's a science, and it's not only statistics, but also a lot of social studies are involved when you build this model and make sure that you receive the accurate results. But if you look at the traditional and alternative parameters simultaneously, it gives you a very comprehensive and complete evaluation of your borrower. So things, how much time they spend online on social media, or how much time they spend exercising, it's all, that all matters. And that's why in this uncertain economic environment, it's important to look not only at traditional parameters, but also at alternatives.
Exactly. And I think that even if you were to rely on your traditional credit agency, you wouldn't have the ability these days being able to see even judgments or tax liens.
Absolutely. And what's important when you analyze alternative data points, you deal with huge amount of information. So it's usually requires use of special AI tools so that you can process all this data automatically and structure it and organize it. So in TurnKey Lender, we do it all automatically. We can set up all kinds of rules for different categories of borrowers, and combined with multiple scorecards, it allows us to break down all our applicants into several risk categories, and we can make certain automated actions for each category. Like we can approve all low risk applicants automatically, we can reject all high risk applicants automatically, and we can manually review this gray area in the middle. At the same time, we can enable risk-based pricing, so we can charge premium for higher risk applicants, and we can give special incentives to lower risk applicants.
I like that point that you just brought up there, Elena, talking about pricing and pricing the opportunity based upon risk profile. Very strong point. Thank you very much.
And that's how all this information is presented to underwriters. So whether they make decisions automatically or they have to review the information before they click approve, it all can be seen on one screen in very user-friendly form. We show the scoring results, we show bank statement scoring results, we show all the rules which were not met by these applicants, so that we can see where the potential risk is, and we can focus on those areas. We can request additional information, or we can offer different terms to this applicant.
Wow, thank you very much. I always wondered why it took them so long to tell me, yes, you're approved. So
yeah, because
now that the borrower has been approved, and thank you for walking us through that back end, now let's move further down the path of the lending journey. how does the lender use technology to digitize the funding experience?
So in payments, when we have a new product that we know is really going to change things, it is really exciting for us to be able to offer this to the market. And this is exactly what this product does. You know, traditional funding methods for loan originations have really surrounded around checks, cash, ACH, and these methods are inconvenient, and we don't even know if they're not going to be outdated once all this crisis shakes out. We don't know if live checks and cash are going to be feasible in the future. So in order to address these outdated methods of funding, lenders are now looking toward a product called Instant Funding, a Visa Direct product that actually pushes the funds to a debit card electronically through the MasterCard and Visa networks. So if you can think about it, one of your customers could call on the phone, give a lender a debit card number, and that debit card could be funded in a little matter of minutes. It really is a way to change the landscape of funding. Consumers love it. Money in minutes. The bank accounts are funded, and the consumers have access to these funds. That is an obvious benefit to a consumer, but lenders have as large a benefit. So we know today lenders are probably not in their offices, and when they get back to their offices, are customers really going to walk back into that office to receive a paper check or cash? Is that going to happen in this day of age? So instant funding can be a way to fund these loans without having to be face-to-face with customers. Also, using an ACH method of funding is usually an overnight experience. Instant funding will allow a lender to fund a transaction 24 hours a day, 7 days a week. This means over a weekend when a consumer may really need the funds. If they're applying for a loan on a Friday night, they could actually receive funds on Friday night, not the next Monday morning. This could be a game changer for a lender to be able to really meet the need of its customer. And then lastly, you know, handling paper checks and cash today is probably not going to be appealing as it was even 4 weeks ago with all the worries that we have today with drum transmission.
Exactly. And I would think that in what you're talking about here, Susan, the Apple Card would be a very good example, real life example of instant funding as you've discussed.
Absolutely, absolutely. Consumers are savvy to the fact that they have a debit card, whether it's a debit card issued from their bank, a debit card issued from their payroll as a prepaid debit. So all of these cards can be used to originate a loan.
Fantastic. Thank you very much, Susan. Elena, could you walk us through these next slides? It looks like this slide that I'm looking at here could be accounted for as a customer portal. What is the importance that you've had in your experience in a customer portal?
You're absolutely right. We are looking at the same loan application process from the borrower's perspective now. So we have just few screenshots to show the steps of the journey. The first thing, naturally, they would go to a website of the lender. They would apply for a loan. And once they submit the application form, they're taken to the borrower's portal. That's on the next slide. And that's where they can see immediately the status of their application, or they can, or if the application was approved. And we do that instantly, as I mentioned. They just need to enter their bank details, they need to review and accept the terms of the loan, and it all can be done with just one button click. And once they do that, the system will automatically disperse the money to their bank account, that they designated. So it is extremely easy to activate the integration with REPAY in our solution. It's just a matter of entering the credentials and clicking activate button. So once that's done by the lender on the back end, customer would have ability to receive the funding instantly once their loan is approved and it's processed. So so here again, all the paperwork is generated automatically and it's sent automatically to customer. They can accept it here. And then On the next slide, we'll see that once the money are credited to their bank account, they can see the repayment schedule, and they can log in to this portal at any time. If they want to make a early payment, they can do it here manually. Otherwise, all the payments will be processed automatically according to the schedule. So they also can interact with the lender through chat, which they have in this customer portal. They can track all their loans. They can review and update their bank information. So whatever they need to keep track of their outstanding loans and stay on time with payments, they have it here.
Wow, it looks like from your explanation of the traditional lending process to this new digitized process, we've gained a lot of ground and reduced a lot of time.
Absolutely.
So let's look at the repayment piece now that the loan has been funded. What are some of the best practices lenders can implement to make it easy and convenient for borrowers to make loan repayments during this time of social distancing?
You know, even before this crisis, it's all about convenience and availability for the consumer to make the loan repayment. I love what Elena just showed us, the ease of that customer portal and the information coming through it so a customer can self-service. They want to self-service. They want access to their account and balance information and the availability to make a payment on their terms when they want to make the payment. Consumers work all day, have a long day, climb into bed at night, and are ready to get on their laptop to make their bill payment. These are well after business hours for lenders. So it's important that that web portal is the very first step a lender might take into offering that 24/7 experience to their customer. We've heard this term omni-channel experience for our customers for the last 18 months. This term refers to having multiple touch points for your customer to come in and interact with their loan and make payments. This is an important factor for any lender who wishes to grow in the future. As your customer base ages, they're going to gravitate toward channels that they're more familiar with, web portals, IVRs, an 800 number where a customer could call and make a payment. But different sectors of your borrowers may gravitate toward a text pay option, a very quick and simple click, 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 and your payment is made. Or they may gravitate more toward a mobile app. Customers are going to use what is favorite to them and what they enjoy using. So it's best to have a multiple pronged approach to how you serve your customers. Each customer is going to gravitate to what they want to use as a payment option.
You know, I like that, Susan. I think it's really important from a customer experience perspective, customer expectations, that they can find a way to process a payment according to what they're used to. I really think that that's important in this time.
Absolutely, and I would add, the integration to the systems is equally as important. So while the customers are using these outside technology sources to interact, it's very important, as Elena said, that the core system is able to record and report on what the customer's choices are.
Fantastic. Thank you very much. So Elena, share with us a little bit of what we are looking at here. It looks like this is where a borrower could be processing some payments. Is that accurate?
Right. So this is a servicing workplace of the TurnKey Lender platform. So we are looking at the same process from the lender's perspective. So for each account, you can see we can see the details of their schedule, and once the payments automatically processed, we can see that updated in the system in real time. So for every account, we'll know exactly if the customer is on track, if they make their payments early or on time, or if they miss their payment. So the system takes care of all the notifications and all the updates.
Fantastic. Thank you very much. Now, we gotta love reporting. Tell me about the importance of reporting.
Right. Since all the information is captured in real time, we run real-time reporting for the portfolio performance, for scorecard monitoring. So again, since we collect this information for different borrowers, we can calibrate and improve our decisioning algorithm, because we analyze this information in real time. So additionally, lenders have to submit reports to credit bureaus, and all these reports are automatically generated and submitted automatically according, in the right format. And finally, all the repayment information can be easily exported and transferred to the accounting software, or we can do it also in real time through an integration with accounting software. So it's basically the whole loan management process is set on autopilot. The system takes care of everything, and you can monitor the performance of your portfolio in real time.
Fantastic. And Elena, could this be a consumer-based portfolio, or a commercial and industrial-based portfolio, or even commercial real estate?
Absolutely. So the system that we are showing here is not hard-coded. That's why it can support any credit product. We can map and configure any application process, any decisioning logic for both business loans or consumer loans, for secured, unsecured loans, and we can consolidate all the reporting in one place. You'll be able to see it by the product, or by the geography, or the whole portfolio as a whole. So yeah, we can do any kind of loans.
Fantastic. Thank you so much. So we've discussed the major elements of the lending journey. Let's take a moment to evaluate communication methods and how they are changing in this post-COVID environment. How can lenders adopt and implement communication methods that engage existing and potentially new borrowers?
Okay, so I mentioned some of these features already. So it is extremely important to be able to communicate with applicants and with borrowers automatically. And we have a long list of pre-configured notifications for different events, but also our lenders can configure their custom messages. They can create custom templates, they can assign them to certain events, and the system will automatically send out this message when the event happens. So we can send email notifications, SMS messages, we can print letters if that's needed, all kind of channels are supported. At the same time, you don't need to think about your reminders. You don't need to think about any communication during the application process. I mean, the paperwork is sent automatically. Then they would the borrower would receive a reminder to sign the paperwork if they haven't, and so on. And so all these notifications, they support them through the whole loan life cycle. And it's all recorded. It can be reviewed. Your messaging can be improved. You can use these notifications for running campaigns, for doing cross sales, upsells, and so on.
Fantastic. Thank you.
And this is just a sample of our different kinds of notification that we support. But again, this is just a basic configuration. It can be extended as needed.
You know, as I look at this notifications page, Elena, I would be curious to know if I could use this notification to, say, help with covenant structures of loan packages, notifying borrowers when potential financial documents are due, borrowing bases, or even accounts receivable or payment or payable notifications.
Absolutely, absolutely. So you don't need to send any manual messages or emails, or you just can set it up once in the system, and our TurnKey Lender will take care of the rest.
I wish I'd had you when I was a lender. I was always in trouble for trying to collect those documents from my borrowers.
Yeah, I would expand on that, saying, now is the time that lenders need to prioritize engagement and communication. People are at home, they're concerned about the future, and lenders have the ability to position themselves as a financial partner to their customer. So as Elena said, these investments for this omni-channel platform can be an omni-channel platform not only for payments but for communication. So the ability to send documents to a lender's branch where staff members are not there but can remotely sign in and see those documents were collected is a huge benefit for lenders looking at expanding their communication methods into this omni-channel experience. Particularly text pay and text pay and SMS messaging and mobile applications can go a long way to bridging the gap between lenders and their staff, both that are remote, now talking to remote borrowers. So borrowers are very familiar with these products. They use them on a daily basis. They use them not only for payment, but for uploading documents, for chat sessions. And TurnKey Lender has already taken the steps to incorporate these methods into their channels. So we do realize it's an investment for a lender, but it's a great investment to make for the communication touch points that it's going to be able to increase without having to staff up to do those increases for touch points.
So we've had some great discussions as to how lenders can adapt and digitally transform their institution. From a micro level perspective, how can lending technology software help the economy potentially rebuild? So Elena, I would ask you a question. How could technology reduce the risk of COVID transmission?
Yeah, so it becomes extremely important to be able to provide the contactless credit these days, because we know that both businesses and consumers are struggling, and lenders have to help them to get through this financial hardship. And while in many cases we cannot meet with our customers face to face, ability to stay connected through online channels, mobile channels is extremely critical. It becomes a necessity. It's not a privilege or an option anymore. So that's something that every lender must have and must offer to their customers.
Exactly. Now, I'm always curious. I've heard horror stories about hard-coded solutions and customizations. Tell me a little bit about flexibility and why that's important.
We've all seen how the whole economic situation have changed overnight. I mean, it was a dramatic change in macroeconomic, in like now everyday lives. And for lenders, it meant that whatever they've been doing before is not going to work anymore. It's affected business lenders, it's affected consumer lenders. So they had to review their credit risk assessment algorithm and to make changes to meet these new challenges really quickly. And if your solution is hard-coded, if you have to go to your IT department and request certain changes and then wait for weeks till they implement that and debug that and report back on the results, I mean, it's not an efficient way of handling the lending process anymore. So multiple changes have to be implemented overnight with all these new government stimulus programs. When like Paycheck Protection was launched, and just within a week, lenders had to have this solution up and running. And those who have the ability to configure their credit products and their verification and decisioning rules quickly were able to meet that demand. Others just were going through manual process, and we know it was chaotic for everyone. So the flexibility and ability to make decisions and to make changes in your decisions and algorithms quickly is essential these days.
Very important. Very, very important. How fast can a market change? I mean, I think we've had a real life experience, and one day it's business as normal, and the next day it's shelter in place. So I would assume that being able to change credit policy on the fly is extremely important during these times.
Exactly. It's like with business lending, for example, you cannot look at traditional financial ratios analysis anymore, and you have to be very careful about the situation in different verticals. We know that some industries were affected more, and some industries were affected less, and some industries just benefited from the whole pandemic situation. I mean, they're growing, and they don't experience that. Adverse effect that, let's say, hospitality or restaurants experience. And that's why it's important to be able to configure your decision-making algorithm quickly. For example, if you look at different restaurants and one of them, like, you know, that their revenues fall by 90%, and the other one, their revenues fall just by 60%. So you'll have to be able to capture that information quickly and use it for decision, for a quick decision on who to work with and who to reject. So yeah, so that's a ever-changing environment. We need to be able to make changes depending on the regulation, depending on the what's going on in economy. So yeah, so quick changes are a must these days.
Thank you very much. And so, you know, after we get through this and we have our new norm that we hope we get to very quickly, how could a business increase revenue with a loan origination solution like TurnKey Lender? What could be some options for increasing revenue that a client or a non-traditional lender could look for?
So since the situation is very difficult for businesses and for small businesses especially, and for healthcare industry and for all kind of retailers, I mean, they look for new ways of offering better terms to their customers, and with simple buy now, pay later solution, it can be a really win-win situation for both businesses and customers. So it's better to get paid a little bit later than not get paid at all. And what we see these days that these fintech or lending solution, they just become a normal point of sale service for all kind of customers. So it's not only about lenders. Businesses, they start incorporating financial services in their into their digital processes. And again, we talk about consumer installment plans. We talk about merchant cash advances. So I think that all these new ways of supporting customers will help to get us through the economic crisis.
Thank you very much. And I think last but not least, loan lifecycle management. Having all of the steps of the loan lifecycle from application all the way through servicing and collection is obviously important. It would help a lender or a non-traditional lender be able to keep in step with up or down markets, correct?
Yes, you're absolutely right. First of all, it helps you to monitor your decision-making algorithm, your scoring models, when you can track a loan end-to-end, and you can see which characteristics or data points affect the credit worthiness of each borrower. You can adjust your rules, you can adjust your scoring models, because you have this complete end-to-end picture. So, and also, yes, regardless of market conditions, we know that collections and timely repayment are extremely critical and to have it all in one place, it just streamlines the whole process. And that's the trend we see in the industry now, that instead of buying separate solutions for different modules or for different functions and different departments, financial institutions and lenders, they tend to migrate to more unified platforms which can cover several areas simultaneously. So instead of buying multiple solutions, you would use just one solution with all the necessary add-ons, but you'll be able to keep all your information and all your portfolio reports in one place.
Fantastic. Thank you very much. Well, Susan and Elena, thank you very much for the time that you've given us today. I would like to now open this up to our audience and see if there are any questions that we could address for you currently. I think we have a few. Let me see if I can pull those up. I think I've seen one from a Joseph. Do we do pre-authorized debits? Or can we offer pre-authorized debits?
Yes, the payment application does support pre-authorized debits. We also can do zero authorizations on ACH to try and identify accounts that might not be in good standing before we attempt to ACH as well.
Thank you very much. And this question would be directed at you, Elena. Do we have integration with QuickBooks?
Absolutely. So we have integrations with QuickBooks, and so actually we have several integrations. First of all, I mean, just for basic reporting, when we push all our repayment and loan date information to QuickBooks for to GL, and we generate all the necessary financial statements. But we're also, for our business lenders, we have an integration with QuickBooks when an applicant can give their consent during the application process to access their QuickBooks information, and we would just automatically pull all their financials from there, so and process it automatically. So it basically eliminates the whole all the need for manual keying in all this financial information, or for reading PDFs with financial statements. So we work with QuickBooks, we work with all other major accounting software providers.
Thank you. And how quickly can we add payment processing capabilities to a TurnKey Lender account?
I mean, as long as you have credentials, as long as you're registered with REPAY and establish your relationship with them, and you have, you have your credentials, it's just a matter of a few minutes. We actually can share a video showing how you can activate this integration in QuickBooks or in TurnKey Lender, and also showing the whole customer journey and loan management on the back using REPAY integration.
Fantastic.
Sure, and for us, it's about a 5 to 7 day business process from the time that we receive the documentation, the application, for bank approval, and then submission for the credentials Elena mentioned, so that they can go live in the TurnKey system.
Awesome. And for instant funding push to card payment, can that transaction be reversed?
That's a great question. I appreciate you asking that question. So when I talk about this, I ask that you picture kind of a softball or a baseball game with a pitcher and a catcher. So an instant funding transaction where you're actually pushing that fund to a debit card is that type of relationship. When you push that transaction out and it leaves the pitcher's mitt, it is going to be forever gone and on its way to the catcher's mitt. There's no way to really void that transaction. If you tried to claim the money back, you'd have to go at it as much like a debit, like an ACH debit, to get it back. And if the consumer had liquidated the balance from the account, it would not be there. So you do have to make sure that the card that you're funding is the card that's intended to be funded.
And Very good. Thank you for that analogy. I love the explanation and tying it to baseball. It really hits home. Pardon the pun. Now, what I would again thank all of our audience for being in attendance. If there are any topics that we touched on today that we could cover or expand on, I would ask you to reach out to us. We're happy to book an hour with you from an advisory perspective. We'd love to share our knowledge. We'd love to share our resources. We'd love to be helpful during these challenging times. Thank you very much again, ladies. It was a pleasure, and I enjoyed listening to you. We'll have to do this again soon, and have a wonderful day.
Thank you very much, Jeff. Thank you, everyone.
Thank you.
Thank you.
Thank you.